Muslim travel bans out, the Paris Climate Accord in, racial inequality out, immigration in, pandemic out, economy in. All these and more were the first thing incoming President Biden put his signature to just hours after his inauguration yesterday. Now it's Thursday, and here's our economic breakdown. Following yesterday's presidential inauguration, U.S. 20-year bonds were auctioned yesterday at a 200-point yield increase. Markets greeted Joseph Biden yesterday with an almost 2% increase in the Nasdaq and 1.39 for the S&P. The dollar is headed back down after last week's mortgage application registered a 1.9% contraction, and January's housing index lost 3 points, landing at 83. North of the border, Canada's dollar is up slightly after the nation's central bank decided to hold interest rates steady at 0.25%. Some mixed messages here on the US-Canadian pair. We've briefly broken below support, but the MACD has just crossed above its signal. This afternoon we'll be getting quite a lot of data from the US stored up over the past day or so. That will include building permits, housing starts, jobless claims at 1:30 GMT, and inflation protected 10-year bonds to be auctioned at 6. Presidential contagion has spread to European markets this morning, the DAX leading the majors up by 0.77%. Ahead of yesterday's inauguration, EU President Ursula von der Leyen informed Joe Biden she expects the new administration to rein in the big tech companies, citing the spread of fake news and what she called unbridled political power. The euro is up a mere 0.1% after yesterday's consumer inflation remained static at a negative 0.3%. This morning, France reported a 4-point improvement in January's business sentiment, while Italian industrial orders contracted by 1.3% month-on-month in October. At 1:15 today GMT, we'll be seeing the European Bank's interest rate decision, and that's about an hour and a half after Britain's industrial trends orders for January. Asian markets also closed up this morning, led again by Shenzhen's 1.95% rise. Only the Hang Seng registered a loss, 0.07%. All this as China's central bank pumped another 248 billion yuan into the economy through reverse repos. The yen lost some traction overnight following December's trade balance for Japan showed a less than expected, but still spectacular, doubling to 751 billion yen. At 3 this morning, the Bank of Japan decided to maintain its negative 10% interest rate, but lifted its economic outlook for the fiscal year to 3.8% growth. In Australia, unemployment improved by 2 ticks to settle at 6.6% for December, as the participation rate edged up by a 10%. Tonight, we've got CPIs from Japan at 11:30, and 2 hours later, manufacturing and service PMIs alongside Aussie retail. West Texas crude dipped over $1 a barrel yesterday after the API revealed a 2.5 million barrel increase in oil stocks. And Bitdown is down another 6% this morning after investments giant Blackrock okayed 2 of its funds to invest in CFTC Bitcoin futures. Earnings were a sea of green yesterday, with Procter & Gamble and Morgan Stanley both exceeding expectations. United disappointed with a $7 loss per share despite $1 billion more in revenue than the previous quarter. They lost nearly 3% after the closing bell. Ahead today, IBM, Intel, Baker Hughes, and Carnival Cruises will be presenting their quarterly earnings. And finally, in a global first, Google has agreed to pay French publishers for online news content it publishes after months of wrangling. Last month, Google blocked local news in Australia after the government ruled it and Facebook should pay for such content, a move deeply criticized by the US government. Well, nobody can say we're off to an exciting post-Trump journey. Let's hope the ride is a little less wild, a little bit more beneficial to all of us. We'll see you again tomorrow. Bye for now.